Hello guys, my name is Abdelkarim Ramain. I am professional trader. I am your coach and trainer for many years. So as you can see, I made a video just on Friday. As you can see, we have two gap apps, one in Apple and one in Facebook. Now, you know, the gap apps, they are 50-50 chances to get a gap app. So it's not really trading. But sometimes when we have a big trend, sometimes you have a good surprises. This is what happened. Understand that Apple and Facebook and other stocks, not those only, we have been trading them a long time ago. I think it's 3 or 4 months right now. So it's not now. But we follow the trend and but we assume the risk. We have made a lot of money from them, from these two stocks and other stocks that we don't have a gap app. And most of my stocks are 2 months, 3 months, 4 months. It means from February. And you know that at the end of February we have the downtrend beginning at the end of February and beginning of March, and you see that thing took some of our profits. And right now on Friday, our trading account is 90%. Hello Sabah, thank you very much for coming. So we have 90%, and if the market continues to be good like this, we will reach 100% for this year easily. Now, some people, they might think and say, for example, anyone can have a 100% or 200%, or what is the deal? No, not everyone. Not when you just take a penny stock and you do one trade. I have 2 or 3 guys. They are now doing only penny stocks. Yes, we have a lot of money in penny stocks, but you should be very careful with them. And some people, they are crazy. And this is why I want to do this live about discipline. Understand that those people who are not disciplined and they make crazy trades, sometimes they pay. One day they pay for the mistakes. When they pay, it will be 2 big mistakes. Top series, thank you very much for coming. Now, what we are talking about today is generally learn discipline. Discipline doesn't come when you know the rules of strategies. It doesn't come like this. It's like discipline. It's like a boxer. Just I give you with this because most of the people, they know boxing, they know the thing. It's not that someone at night will show you the techniques, and then the next day, hello Fabian, how are you? And then the next day you go to do a fight with Mike Tyson or Muhammad Ali in the past or whatever. You can't do that. So what you should work for months, work for years, until you reach that level to fight experienced guys. And the most important thing in trading is to have discipline. And most of the guys who have problems is because of discipline. I will give you an example. In my strategies, for example, when you choose a stock, let's say you use all our criteria of choosing a stock, which is very good. You choose them, and the stock is good, and you show me the stock. I say, yes, this is a good stock. Okay, everything is right according to the rules, but And then you buy it, and then next day you try to see what's going on for next day or next week. Or what is the mistake that is done now? Let me drink some coffee before I continue. Okay? So what is the thing? What is the problem? Although you have done everything right, you have chosen the best stock in the market. At least, for example, that day you have been, Rahmatullah, how are you, Rahmatullah? Thank you for coming. Free trader, thank you for coming. You have done all the rules. But there is another rule that you forgot. Now what is this rule? The rule is about risk. When we speak about risk, it's not only stop loss. Here's the thing about risk. Before you buy the stock, yes, it's coffee time, free trader. I just wake up. I have a nap right now, so I wake up. So I need my coffee, not to go sleepy or sleep because it's night, So before even you buy the stock, you should see where to put your stop loss. Either physical, it means you put the order, okay, or it is mental. Mental, it means you know where you exit, and it is official. You say, okay, I bought it at $20. Just an example, okay? If it goes at $18.50, I will risk $150 in this trade. Please, guys, when you do that, you are disciplined. Now, why it is so important to know where to exit? Because all the losses comes from that side. I see guys who enter a trade, and then the stock goes down. They don't put stop loss. They lose a lot. I have seen one guy who bought a stock at $3. There is a gap up. Okay, the stock let's say was $1. When he see that the stock we have a gap up, $3. Now for me, for my students, a rule: we don't buy gap ups. We don't. We buy them later, but we don't buy the day the gap up. No, it's risky. This is one rule. Now, this guy, he bought the gap up, $3, and then the stock was going down to, let's say, $1.50. Now this guy has lost money, and then he sent me an email, because I encourage people, although they are not my students, they are my subscribers on YouTube. I always help as much as I can. Anyone can ask me questions, can ask me things. Now I am not going to train you. You send me an email, I'll train you for free or something. No, but I will give you your mistake. Now this is regarding discipline, or regarding rules. So that's why I give you my opinion when I know what you did. And I ask the guy, who tells you to buy the gap up? First, you have done a mistake in buying the stock. The second mistake, the stock is going down, and it takes from your principal. It means your money. Okay, if you put $3,000, okay, in this stock, whatever you bought, you put $3,000, and then from $3 it goes to $150. It means you lost 50%. Now, no one knows. Who knows where the stock will be? It can come back again. It can go down to $1 or to 50 cents or to zero, or I don't know where it goes. So you should know what you are doing. You should be disciplined. Discipline, it's just you have rules and you apply them. Rules are not to write the rules, to have strategies, and you don't apply them. So what is the usage of these strategies? If you come to me and you read all my training, but you don't apply anything. When you don't apply anything, you apply only one thing and you leave the other thing. What will happen to you? You do mistakes. This kind of mistakes is related to discipline. You are not disciplined. Now, when you are not disciplined, you will not be a good trader. You will make some money, yes, sometimes, like a penny stock. I see my students, someone $10,000, he put it in a penny stock. It goes to, he made $500, and then he waited too long, and then it goes down to 300%. Although the trade is excellent, but you know, 500%. He was 10,000. He sold 50,000. Guys, I'm telling you, sometimes you can make a lot of money when you have the right stock. So that's why I am always excited to see these kind of stocks. But for me, I don't buy too much of these penny stocks, and I buy with little money. Even in my trading account, I bought a lot of stocks. We made 60%. We made the one that here this year, we made 210%, which is a penny stock. From $2 or $3, it goes to 8 or 9. Okay, and some stocks we bought them, we make 50%, 100%, and then it goes 1,000% later. Well, I sold it. No one knows what's going on in the market, especially with penny stocks, especially this year. That's why I told you this year it is not the same as the other years, especially with coronavirus stocks. I made a strategy that I have never made a strategy of speculation in my life. This is new for me. I just see a phenomenon this year. I see these stocks that are related to drug companies, that they make vaccine, they make cures, and now you see the news. Russia said that in 10 of August. It will sell its medicine. I don't know what it's called, but I just see it just at randomly, because I don't follow no news. I don't follow no TV. As you know me, I don't follow anything about that. I don't have time to go to there. But when I'm in Facebook, I see news like this. They say Russia has made. Now, the company that has made this, maybe it has gone 200% or 300%, 500%, because it's news, good news. That's why in this Friday, I have gone and searched for, I don't know how many stocks, 10, 15 or 20 penny stocks, the same thing about my strategy, and I give to my students. That's why I see a lot of people, when they see this, they come and they subscribe because of these stocks. Now, they are risky, these stocks. So when we have a lot of risk, in terms of discipline, if a stock is risky, do not put too much money in it, because it is risky. Okay? I see some of my students who don't have that much money, even they have 10,000, 20,000. They put only $200, $500, $700. But sometimes one of the guys, he told me, I bought only $200. The next day, with this kind of stocks, he got $1,200. Okay, so it means, but don't be greedy in the market. Don't be greedy, because sometimes you put $10,000, the next day 90% is gone because of the company bad news or FDA, especially the drug companies. I'm telling you about drug companies, since some of you might go and try them in the future. So I'm always asking you not to put too much money. Yes, I'm telling you, like this guy, he sent me his trade at the beginning, and I follow. When it was, I think when it was, when he doubled his money, he sent me an email. I told him, okay. Try to see if it goes more, sell half and leave the half of shares, because you should get the money, the profits, 100%, 200%, 300%. It's too much money. But he left it, and he was right. It goes to 500%. He bought it at $1.55. It goes to $7.45. When I see that, oh man, I say it was 7. Why you don't sell everything? No. I put stop loss at 4.70. I say, but all this money is gone. And the next day it goes down and goes down, and he exit now with 300%. But he sold 500%, and he was so happy. And I was so happy with him. Now, there are a lot of students that they report 100%, 50%, 200%, sometimes when according to this kind of stocks. Some stocks are doing great this year. We have bought a stock like $14. Now it is $135 in a few months, in 2 or 3 months. $135. It was only 14, and we have bought it in our trading account. But we made 7%, 100%, and when this down trend, I sold it. I told them, okay, it's going to downtrend. It might go too much, so I sold it. We make our profit, and that's it. But the reason I didn't buy it again, because the problem is that my account is full of stocks. I can't buy more because I don't have money. This is another problem for traders. Sometimes the market is so good. You find the stocks that are so good. But the problem, you don't find money. You don't find enough money to buy what you like. So I don't want to search anymore, because if I search, I see other good stocks. I can't sell those that I have and sell. It will be not good, because for me, when I bought a stock, I don't sell it for any other reason except my techniques. So for me, through the years, I am disciplined. I can do mistakes, yes, like everybody else. But sometimes, it is just something that comes to you, because we are human. And when you are human, you do mistakes. But the mistake that I did is not as big as beginners, as the people I teach, yes. But it is a mistake, okay? It is a mistake, and that's it. So the subject of today is to learn trading discipline. You should put rules near you. Okay, when you are, for example, in my training, you study my training level 1, 2, 3, 4, 5, 6. You should put the rules. Rule number 1, I give you the rules, how to search for stocks, when to buy, when to put stop loss, when to sell, how to follow the trend, what are the other mistakes that you can face, because sometimes you don't face the same problems. Okay, you don't save the same problems. That's why I make training, I think it's 19 or something, how to fix your trading problems. And I make an ebook which is called 30 Reasons to Lose Money. Now, when you read 30 reasons, you must find some reasons which you are losing money. This is official. This is a sure thing. Because when I put 30 mistakes that you do or that you did, I have done myself these 30 mistakes, but I get rid of them all. My account is always divided into positions. The big stocks I put more money. The penny stocks I put less. I am not a fool to put $100,000 in a penny stock. You can make 200, 300, yes, you can make. But also you can get ripped off with 60% or 70%, and you lose a big chunk of your money. That's why, hello Bassan. Bassan, where have you been, man? It's a long time ago. You are like okay. So let's think. Let's welcome Bassan, because I didn't see him for a long time here. Now, so discipline is hard. I'm telling you. You need months or 1 year or 2 or 3, depending on the people. You need to focus on applying the rules. Your rules, even if it's not my strategies, even it is your strategies. Apply the rules, and you should not be in doubt. That is discipline. What does it mean? Okay? No doubt. For me, when I'm trading, each day I have problem with the stock. I should decide what to do. I know what to do. Now, other people, because they don't have a big strategy, they don't have big rules, they don't know what to do. The stock is going against them day after day, but they get like hypnotized. They don't know what to do. Okay? So Basan said, I am trading cows here in Texas. Yeah, man, the barbecue. Yeah, I'm coming, man. Okay, that's good. So, as I told you guys, discipline, it's not an easy subject. You should just apply the rules. But it is hard. I know, it's not easy for a beginner to do. For example, the stop loss. I said, okay, you buy stock, you should put stop. Where to exit? Most of the beginners, if I told you all of them, they get scared to think about stop loss. I'm not saying you should put it in physical, like an order. You put it in order. Sometimes you exit because now I'm telling you guys a new problem. Like 4 years ago, 5 years ago, we have a new problem. Before, when you put stop loss, the exchange or the market makers they do it right. When they see the market reach that for real, someone has bought, and then they apply the market order that you have, which is stop order, and you exit. But now it is difficult. The exchange is not accepting anymore this stop loss things. So the market makers, their softwares, when they see the bid and the ask, sometimes in the day or in the beginning of the day, some stocks, they don't have high volume. So the bid and the ask, they go apart, far away. So whenever their software reaches your stop loss, it exits your trade. And this problem, I will just explain to you right now, because it helps you understand something that it is very, very important. Because sometimes you don't want to exit the trade. When it goes down, sometimes it's just a correction. It's not a downtrend. You shouldn't exit. I will explain this, guys. So just wait for me, because each time I will try to show you something that can help you trade better. Top Series said some stocks don't allow stop loss orders. No way. What are these stops? Okay, Top Series, give me a stock, put it there, or tomorrow go to your account, try to put a stop loss, make screenshots, and tell me which broker and send it to me. There is no stop loss. You should do it. I will just show you the information. Okay, guys, just keep. I will explain to you this stop loss in a moment. Okay. So you bought a stock, $20. Okay, this is the buy point. And the bid was, let's say I will show you. Oh, okay. Let's make it very, very good. Let's make it very good to understand. Sorry, guys. I try to make it. So the $20. 50 cents. This is the buy point. Now when you buy by the ask. Okay? Now the ask is 20.50. This is what they ask you. Now who ask you? Who ask is the market maker. It's not the broker. It's the market maker. Market maker is the person who fills the orders. Market maker. Now you see that the bid is $20.49. So the bid and the ask spread is only 1 cent, which is excellent. Now you can find the volume. Let's say the volume here is 1 million shares traded in that day. Let's say it's 1 million. Okay? Now, this is during the day, but at let's say at 1:55, people they go most of the time from 12 to 2 o'clock here. They go to lunch. Some people they go to lunch, so they don't trade that much. They are day traders. They sold, they make some money, or they don't. So they go to lunch and they don't trade. You see the volume drops. Now, the volume changes. For example, at the end of the day. Now, let's say I give you the before we go, I give you your stop loss. Now you put stop loss at, let's say 19.00. This is your stop loss. Let's say you put it 19. So your risk that you make is $150. Okay, if you bought 100 shares, your risk is 150 in this trade. Okay. Now, let's say from 12 to 1:55 at lunch, the bid and the ask change. Let's say the stock is going up, is the same, doesn't go here and there, or it goes down, and then you find here, for example, the bid and the ask, it changes to here 20, let's say 30 cent, but the bid here, the bid, it means when you want to sell, you will see that it is 19. Now when it is 19, these are just bid and ask that change every second. So it is just something. Sometimes it doesn't. No one is selling or no one is selling. No one is just few people are there. Like, let's say in this lunch time. What did happen when it go to 19? What did happen? Your stop loss at 19, it will be triggered. Okay? Triggered, it means you exit the trade. Your market maker makes you exit the trade. And then what is the stop loss that you get? Is 230 to $20.30. But you don't want to exit at the 20.30 cent. You want to exit at 19, but it is executed like that because when the system execute 19, she finds that the market is $20.30. This is something complicated, but I'm trying just to explain to you what did happen now. Now is something happening which is bad for traders. This is happened like 3 years or 4 years ago, and I called my broker and I see sometimes I am in a good trade, and then I find myself, I see that the stock has not gone to 19. So I will show you this information. Let's say in the stock, just to make sure you understand. So this is your stock. You bought it at 20.50. This is here for today. Let's say at the end of the day, like me, for example, we buy at the end of the day. This is $20.50. Okay. Let's say this is year 20. Let's say the line that where you exit is here. This line is 19. This is your stop loss. And you said if you bought it here, this is the buy. This is the buy for today. And you put stop loss for tomorrow. You said, okay, like this. Okay. Now, the stock from 250 today, it is here like this. Let's say like this. This is today. Okay. And let's say it's like we have it has been going up, then it goes down. Now here, as I told you, it is $20.30. But because there is no volume, it means less volume. When there is no volume, the bid and the ask will change, will be wide. So they show you 230 as ask, because they ask you this money, because if you buy, you want to buy more shares, you buy it at $20.30. Okay? But the bid, he asks you that if you want to sell, this is the price to sell. This is the bid. It means you sell to the market makers. So their software, if you sell at 19, because you sell very quick at 19, but you get this price 2030. Okay? So you said to me, yes, it is good. I am not going to 19. But the problem is that, here is the problem, I will show it to you, is that in your trade is good. Let's say it stops at 2030. But here is the deal. The third day, your thing is $25. Okay? Your stock is $25. This is just a small correction. The third day it goes so good. So since you exit, you are not in the trade. Normally you should not exit at 2030, or you have this sell bid thing. Normally you should not sell with the sell order at 19. And when you ask the broker, you say the broker, okay, I told you 19 to sell my stock. Why you sold it at 2030? He will explain to you a lot of stuff, but it's a problem in the market, and there is no solution. But before you will never get to 2030 until the stock goes to this and someone sells at 19, and then you get this 19. So here what happens is that if you continue to do this, you will exit good trades. A lot of good trades, you will exit them. And this is bad. Before, I have been into stocks that are good, that are excellent. And I get exit. And I called my broker. And he began to explain to me this and this and this and that. I understand that it's not good enough. So, guys, if you tell me now, like in general, you tell me, guys, what we should do about this. For me, you can do alerts. I know some people, maybe you have done them for other stocks, or like alert to buy a stock or something. I told my students to use them. For example, E-Trade that I'm using has this kind of hello Johnny Juven, hello Imaduddin Shela. Trading in gold, the stock is the best nowadays. No, when a sector moves, there are other sectors that gold and silver and all the other stocks have been all good. It's not only gold and silver. You can find each day you can find stocks. So it's not only gold and silver. Okay, let's continue with the thing. Now let's explain something else about alerts. I give you this information. Maybe it's good for you in the future. For example, I just give you some information. You can use alerts. Okay, alerts. Now the one that I am with is eTrade, and it gives you alerts. So these alerts go to your, for example, your smartphone, or it goes to smartphone, or it goes to your email or whatever they offer. Okay, so instead of putting physical stop loss, you can put alert on stock. For example, you bought it at 9.50. This is you bought it yesterday, for example. Today you are at work. So you can't just do anything. But when you get an alert, it's good when you get an alert. Let's say it is 19 or 18 or it is 20, it goes down. You know that the stock is going down. You can at your break or lunchtime, you can just go online with your smartphone and you sell the stock before it goes to 17 or 16 or whatever. So or you can. This is a very good thing for stop loss, where you should not put physical stop loss. It means you don't go to your broker and put it. You can just know where the stock is. If the stock you find it's going to $22, you don't worry anything. Later at night you just see what's going on to your stocks. Like for me, I always check in the morning at 9:30. I just check where are my stocks. Are they going good or no? And then at the end of the day, like 3:30. So this is mostly. I will give you this time. For example, at 9:30, this is the time, or 9:30 to 10, for example. This is the time I check for all my stocks. To check is just to see where the stocks are going. Are going up or going down? What happened? Now at 3:30, at the end of the day, I check again. Now check. It means most of the time it doesn't take me all the work. It doesn't take me 5 minutes or less than 5 minutes. It's just you open your account. You see your stocks, you have 10 or 13 or 5 or 6 or whatever your stocks. You just see them where they are in the chart. Okay? That's it. It means it's not a big deal. Just you see if your stocks are going up, so it's good day, so you don't worry. If the stocks are going down, you should make sure at 3:30 you go and you open it and maybe you sell some or you buy others. So these alerts are excellent. And I suggest to you that you should use them. If you have your broker, if he provides them, these alerts, and they are free, it means you shouldn't pay for this stuff. It is just the broker helps you with some information, and it's very good, guys. You can use these alerts. Okay. Now, so we have spoken about alerts. Now. Another thing to protect your account and to be disciplined is always you divide your account into many stocks. I don't tell you how many stocks, but you should see the rules. Okay? Bigger stocks, most of the time, the bigger stocks, you should have equal positions. And smaller stocks, you give less money. Now, why? Because smaller stocks, what's the problem? It means they are volatile. You can make a lot of money, yes, but you can lose a lot of money. For us, discipline comes to you in order to reduce the losses. is discipline. What is the good thing for it's better each year you get 35%, you get 40%, you get 50%, 70%, whatever percent you are good, your account is growing every year. It's better to have this than to have 100% one year, 10% second year, minus 60% third year. It means if you continue like this, you will lose all your profits. I will give you just an example to show you this thing that I am speaking about, because a lot of people, although they trade for a long time, they don't know these things. For example, let's say the first year you are doing, for example, penny stocks. First year you have done many good stocks, and let's say you have made 100% in your account. Okay, let's say you have 10,000, you change it to 20,000, which is excellent because you are doing penny stocks. Because penny stocks are the thing it is good about penny stocks is you can make a lot of money. But the second year you do crazy trades and you lost 60%. Okay? So 60%, what is left for you is 8,000. 8,000, this is what you have. But you begin with 10K the first year, you make it to 20. But the second year you hit your account and you lost 60%, which is $12,000. It happens, guys, when you do crazy trades. So you lost your money from the... But what about someone who is disciplined? Now the first year he made, let's say he made 50% for all his stocks. So from 10 he get 15,000. Okay, which is 50%. Now second year it means it was bad or something. Let's say he does only 20%. Okay, so you see that your account from 15. Okay, so 20% is 2,000. Okay, 2,000. Yes, you make 3,000. So your account is $18,000. Now, do you prefer to use discipline and your account is doing great each year, even though it's not doing great as last year, but still you made $3,000, you are at 18,000. But this guy who's doing penny stocks, they go from 10,000 to 20,000, he lost 60%, he has 8,000 only, and this guy has 18,000. That's why the disciplined traders always are good in the long run, because for you it's not only 1 year you trade or two. Think trading is like a business. You should make money each year. It's not 1 year you make money, the second year you lose all your money and your principal. So this is not a good business. You can ask any business. You say, well, what do you think if you the first year you double your money? You put 100,000 in your business, you make another 100,000. What do you think about that? You say, oh, it's great, it's excellent. And then you ask him, no, this business, next year you lose 60%. Oh, no way, I will not do this business because it is too risky. Too risky. That's why almost the guys who come to me when they are doing penny stocks always, and although they have for example 50K, they have 100K, but they are always doing penny stocks. But when I ask them, this year I am break even, I say, how you have 50,000, 100,000 and you just break even? And the market itself has done, for example, 25%, like Dow Jones, or how can the market does 25% and you are trader, you break even? It means zero. It means you do nothing. You work the whole year and you make nothing. So this is the problem of discipline. That's why for me, I'm trying my best to help you guys understand this discipline. And guys, these things takes time. Discipline is a hard thing. It's not easy. It's not just because you learn and you know the strategies, okay? But if you don't apply them and you are strict and you are firm, you will be losing money year by year, because you break the rules. And my students, I am very frank, I am very direct. When he sent me some trades, I give him frank thing. You say, okay, here you have break the rule number 1, number 2, number 3. Here you have done this. Here you have done this. Now, why you don't do that? Oh, I forgot. Oh, I think that this stock is not applying like this. Oh, I know. Someone tells me, oh, I know the company. I know the CEO. I say, man, if you are going to know the economy to know the company, okay, just don't do my strategies. Strategies are not working with company CEO. It is not. They are not following the economy in America. They are following what the traders have done. So guys, always have this idea that when you are trading, there are two things you should never mix up. So I have explained this idea too many times, but still, now why I explain it many times? During the year, I explain it many times, each year, because a lot of students or a lot of YouTubers, they still get trapped into the economy and the thing. I will give you just an example how I see things. And guys, try to bear with me, guys, because this explanation I give you, it's very, very important for your trading, for your career. Okay, so I will give you an example, like last time I have given to you. Now here is the economy, the real economy that we have. Okay, this is real companies. When we say real, it is companies. Okay, companies and anything that it is in real economy. Okay, for example, when they say we have 40 million jobless or unemployed, this is economy stuff. This is facts. Here you get the facts. Now, here is the stock market. Stock market, it is another world. Stock market is not the real economy. Stock market, how it changed, the traders changed the stock market. It's the decision of traders. Traders, decisions. It's not the economy, it's not the company CEO who decide for the company stock. So here you find the stock of the company, like let's say the stock. Here you find the company. But this, I'm telling you, they have no relation. They have some relations, but in terms of the value, it's not the same. So I will tell you something that I have explained this year. Now this year the market was going up in the stock market. The economy is doing good also. Okay, it's doing good. Now, and then we have the news of coronavirus, and the real economy begins to shut down, and we have problems. It's the same thing. But the economy, the stock market stops going down in 23rd of March. I have mentioned this in my videos and in my 23rd March 2020. I said to you that the market has got stops, but I told my students in the subscribers, and when the stock market was going up like this, We bought at the beginning, and this is training that I have. It's called the training 13. How to buy from support line. Now this is a real strategy. This is one kind. This is training level 2. This is training level 13. It means the way you buy is different. Now, the problem here in the economy, it continues to go down. Our economy is doing bad, worse than worse. We have 3 million who are unemployed, and then we have 40 million. Now I don't know even how many million are. It means factories because of the coronavirus has stopped working. People have been fired. Some companies, they laid off guys. They don't have a job for them. So if you can see, the economy, the real economy, is doing worse since the beginning of the news. I think it's 19 February when the news has come about. It means the bad news, not a lot of cases in America and all. But the economy now, we are in July, is doing excellent. Now for us, we are this Friday, we are 90% profit, beginning from 31st of January this year, 90%. But the economy, the facts about the economy, has been going down for long, and guys. Some people, they lost their jobs, they are homeless, 40 million, they are under unemployment status, they don't find jobs, and the economy is still bad. But why the stock market is going up? Because the traders' decisions, we think that in the future the real economy will be good. So the market gives you information, optimistic information, before the real economy. And I think that in the future everything will be going good in the real market. Okay, in the future it means they begin to allow companies to work. These millions, 40 million, they go down to, let's say, to 30 million or 20 million. It means they find jobs. Everything will be okay. And the government, I think they have stimulus. They have passed the law to give money again to the people. So everything is all right for some people. So this is what I want to say to you, that you stay with discipline in trading stocks. You have no relation with the real economy. That's why for me, I don't see this. I can see to get here. When I see the economy, the real economy, what I see just facts. Okay? I see facts, because when they say 40 million, for example, jobless, 40 million. Now this, when we say jobless, no jobs for these people. So when you say 40 million, this is a fact. But 40 million in the stock market, it doesn't show any influence. Normally stock market continue to go down, but traders think that the market will be good. That's why they buy, and everybody buys. Now, if you are stupid, if you see the facts and you don't buy, because one of the guys, he sent it to me, and he said, this year I am break even. I say, how much money you have? He told me I have 50k. I have traded the whole year and I break even. So I have zero. I say I have made 90%, and you see the stocks. If you have just followed me, even if you don't get 90%, you get, for example, 70, you get 50%. You have been okay. But you don't follow me, and maybe you are doing penny stocks a lot. That's why you lose money, and most of the time it's discipline. It's because you are disciplined, you are doing mistakes, and you don't correct them. Okay? So these are some of the things that I want to tell you. And guys, I will answer all your questions when I finish my. It's nearly done. It's 54 minutes. I'm really done. Now another thing. I will answer all your questions, guys. So I just want to finish now. One of the hardest things to do in discipline is to study your losers and winners. To study your losers and winners, I will just explain to them. And why you study them? In order to correct your mistakes. That's why for me, I have made a training. Ebooks and training. Let's say an ebook that I made this year, 30 reasons why you lose money. So this will show you all your mistakes. You should have done some of them. Okay? You should have done some of them. That's why you are losing money. If you correct them, you will be making money. Because it is just a fact that if you do the same thing, you will have the same results. If you are a good trader, you are disciplined, you will be making money each year, regardless of the market. Market is going up, is going down, whatever is the market is doing, you will be you will do the same. So as I told you, I will just go and explain to you this idea about correcting your mistakes. It's very hard, guys. Now, one of the things that beginners they don't do is study your losers and winners also, okay? Not just your losers and winners. I will give you an example. You say to me, I study winners. This is logical. Why I study winners? Yes, because it is the mistake that some of the guys that are my students, and I explain to them, but they don't understand. Although I explained them many times, they don't understand why I make money. I explain to them why I make money, but they don't understand. Although I explain these people, because they are stubborn students, and stubborn is a guy who knows everything, but he did not practice. He practiced what he believes in. He doesn't practice what he learns. Okay? A stubborn students or traders, or you will see. I will give you an example. With losers. $20, this is you buy. I will give you just an example, okay? Now, the first mistake, he has no idea where to put stop loss. So he did not. The first day he bought, like we bought at let's say at 3:30 p.m. at the end of the day, when the green candlestick is good, and following my strategies. This is the first day. Now, second day, this is a loser, okay? Since he doesn't do any stop loss, let's say the stock goes to 19. This is the price of today, our second day. Now, when he looked at the price, he said, no, yes, the stock has gone down, but I'm not going to exit, because if I exit, I lose 100%. I don't want to lose. It's as if he commands the stock market, as if he controls the stock market. Now, this is the second day, and then the third day goes to 15. So he has already lost 25% of his money. And sometimes some people, they stay more and more and more. They lose all their money in the trade. This is a kind of loser that I'm speaking about. If you don't exit, because what is the rule? The rule, you should make small loss. This is the rule in swing trading. I give you one of my rules. Small loss in each trade. You should not do big losses. Big losses is like when you have a fire in your house. You have a fire in your house is all burned. You are burned. If you put $2,000, okay, and you lose 50%, 1,000 is gone forever. Forever is gone. Instead of losing $100 or $200 here, and you exit and you have 1,800, it's good. But you have 1,000, and then you make another mistake, and then you have 500, and then you have $40, and then you begin cry, and you say, Wall Street guys, it is a scam, and the stock market is a scam, and because you are a loser, you think that all the people are losers. Now this is one problem. Now, second problem I want you to do. One of my students, he is so stubborn about this. I explain. He doesn't understand. Now I will do the same thing. You buy at $20. Okay. Let's say you know where to exit. Let's say you exit at 19. You put stop loss. This is stop loss here, which is excellent. But next day the stock is 21. What does he do? He sell. Now, what is the mistake that this guy has done? The mistake is that he has made $100 a profit. It's okay. But are we looking for one day? We are looking for the big trend. We are looking from 20, it goes to 40, for example, to make 100% in our trade. This is, for me, this is a winner. You win some money. This is a winner in trading. This I consider a winner. You make 50%, 20%, 50%, 70%, 90%. This is a winner as a trade. But 100% is not. I will never accept 100% or $100. Why should I sell? What is the reason? He thinks that the market will maybe go down. So, if you are predicting things, why you trade? Why you trade? We don't trade, we don't predict. For me, the basic thing of my strategies is I don't exit a trade except when I see a sign and according to my technique, and I exit because of a rule. So here is the deal. So here is the deal about exiting a trade. Now, before we do the rule, first, why we are doing swing trading? Guys, you should understand this for the last time. I will not repeat it. I repeat it many times. Swing trading is to follow the trend. Follow the trend. This is where the big money. It's like when you go and you have a net and you fish. You have a net like this, okay? And you have a small boat. You are with a boat here. This is the sea. You put a net and you catch fish. All this is fish. So you work the whole day and you make hundreds of pounds of fish. But if you use the hook and you do an attempt, you can have small fish. So compare this guy who follow the trend. He has a net. All these are days, like one fish. All these are days, and the stock market and the trend is going. That's why we are trend followers. This is how do we call ourselves? We follow only the trend. If the trend stops going up, we exit. When it's going down, it's no more going up. So we exit. There are techniques how to follow this trend. I have training for that. And all my training, I do it like a practice in our trading account. Now, as you can see, guys, if you go to the trading, you find, for example, Facebook, Apple, and other stocks. I will not give you other stocks. Okay, let's say we bought them in March. Let's say at the end of March. Now we are in July. Now we are in August. Okay? Did I exit Facebook and Apple? No. Why? I follow the trend. The trend is excellent. I am making a lot of money. Why should I the first day, second day, third day I bought Apple, I make $300 or $400 and then I'm happy with it? I am not happy with $300 and $400. I want thousands of dollars in each trade. Thousands of trades. If you go to my account, when I show you my account, you will see where I bought a Facebook and Apple. Not just those, but I have a lot. But you see also that some stocks, when they go down, I get rid of them very, very quick. I don't want to lose thousands of dollars in each trade because I let it go down. For example, I gave you an example. I don't do that. I am not. So I will just give you an example here about two of the trades. So this is a winner and this is a loser. Okay? Here where I bought. Let's say I bought at 20. Let's say I put 19 as stop loss. So if the stock goes first day up, then goes and hit my stop loss, I exit. This is a loser. Now how much I lose? I lose a small. Always I lose a small. Now what if it is a winner? If it is a winner, okay, I bought here at 20. Okay? I put the stop loss at 19. The same thing I did here. The same thing. Now the stock is now 40. I follow. I will not sell here. I sell here when it's going down. $40. So you tell me, how do you know that it stops? Yeah, there are techniques that I show you and I use. That's why if you go to Apple and Facebook, you see that I did not exit. Sometimes I exit and come back. Okay? Because I'm following the stocks closely. It is not, I am always having like, let's say 15 stocks or 14 or 13 or 17 or 20 in my 190,000, 100K trading account. Some they are good. I give good positions, but some stocks I put just a little bit when they are penny stocks because they are volatile. This is to manage the account. You should do all this in order to make money each year. This is work. This is a business. It's not just you are just doing whatever you want, no discipline. No. So how can you make money? Okay? Because if you are going to play the fool in the market sometimes it gives you a gift. You think that you become a good trader. You know. Some of my students, I have one or two who are just crazy students. He told me, I know tomorrow there is a gap up. I say, man, if you want to follow me, if you said I know, please, and subscribe for my subscription, and go away. Go with your strategies and do whatever you want. Become a millionaire by yourself. Don't come to me. Because you don't need me. Why you are subscribing and paying money for me to help you? Now when I want to help you, you said no, I know better than you. Okay, if you know better than me, go away. Go away, do your stuff. But if you lose your money one day, you come to me. You come because a lot of people, when they don't listen, they do 1 year, 2 years, 3 years, they lose all their money and they come, oh Karim, you are right. I have done stupid trades. I have done this, I have done. But the market gives them sometimes luck. This is called luck. It's not trading. For example, when you a penny stock and you get a lot of money from penny stock. It's not because you know. This is because you are right. There is two different things. When you are right, it means you do the discipline, you do the strategies, the techniques, and you are right. You stay. You make money. This is good because the market rewards you about the thing that you are doing. But if you are not disciplined, you can't do this thing, this stupid thing 2 times, 3 times, because one day the market will crush you. He will punish you. So I have seen guys who send me, I am into a gap down 90%. I have lost in my, I put all my money in that stock. It was doing excellent. I make a lot of money, but 90% today. What should I do? I say, well, what can I do for you? Are you following my strategies? He said, no. Why you ask me? Well, after you lose all your money. For me, I am helping you not to lose your money first. This is where discipline comes, to not lose all your money. You lose little bit because part of the game. Who knows the future? Who knows the future? No one knows the future. If I know the future, let's say tomorrow, God, I sleep at night, for example. Before let's say for believers, they ask whatever they want. So I ask God, oh God, let me see the penny stocks of tomorrow that are 5 cents and 10 cents, and it goes to $1 to $2. Just give me one of this stock I buy in the morning, and it will give a gap up, and I will be a millionaire. Why should I put 5,000? I put 100,000, 200,000. I put all my money. I put everything. I sell my house. I sell my car. I sell everything I have, and because I know the future. And I put them in the stock. Tomorrow, from 5 cents, it go to $1. Yes! From $10,000, you become a millionaire. That's it. And next I put 2 million or 3 million. And then from 5 cents, it goes to $1. Then I become billionaire. In few days, I don't need to work anymore. And I have the magic formula. As they say, the Holy Grail. It's done. But understand that business in stock market is not run like this. You should take trading serious. It's your money. So you should be responsible for your money. If you want to do crazy things, just do whatever you want. You are free. Why you come to me and you want to learn? For me, when you learn, you will have consistent money each year, and your account is doing good, excellent, better than S&P 500 or Dow Jones. You are doing trading, and your account is growing excellent. Don't be greedy a lot in the market. But if you want to do crazy things, just put little money. You have 10,000, put 500, 200, 300. It's okay if you lose 200 or 60% or 50%. You lose 100, 200. It's okay. But if you put 10,000 and next morning you find 60% or 70% is lost because there is a gap down in this penny stock, you are ruined. Especially when you buy it with margin. You will, in the morning you get a margin call, and they ask you, they sell your position. They say you must give me your money because all your money is gone, and you should give me money. That's why it is so dangerous to use margin money in penny stocks. All this information I give you is just to make you aware, not to be trapped in a big problem. Because when you are in debt, you have 10,000, you are good, you are trading, and then you do crazy thing, and then you lose all your money, and you are in debt, you have margin account, and the broker tells you, okay, I give you 1 day, 2 days, you should bring me my money. 10,000, all the more, 10,000, 20,000, 30,000. Especially those who do selling short in penny stocks. Understand that any stock can go to the sky next day, or it can go down. So guys, try to be disciplined. This is the thing. Discipline takes time. So it's not I tell you now the rules, tomorrow you will be an excellent trader. You need time. And each time you do a mistake, you say, okay, Karima, what's the thing about this stock? What's the mistake I have done? I don't know. Okay, I'll show you the mistake. I say this mistake, you find it in training level 7 or 6 or 9. Go to this training, you find your mistakes. Oh, I say, Karim, is this? I shouldn't do anymore. That's it. Now, you correct your mistakes through the years. You'll see that your account is growing faster. And then you will be an excellent trader. You will never be scared about the market. When you buy, whatever happens in the market. You are covered by your knowledge. But don't tell me, I know tomorrow there is a gap up. And then he sent me a stock, he sent me, see this stock. Tomorrow it has gap. I say, okay. And tomorrow I see the stock, it is just a normal candlestick. The second candlestick is like 8% to 10%. I said this is not a gap up. It's just a normal thing. And don't tell me, I don't need information like this. I have never used a sure information. I don't have it. Because tomorrow, who will govern tomorrow is the decision of all traders in the stock market in that stock. It's not me. I buy according to my rules, but I don't know what will happen. Tomorrow it can have a gap up. It can have a gap down. It can have the stock going down. I can show you. I will show you right now. See, before we let's show you the chart. Now this, I'm telling you guys, I'm telling you, one of my students has got this. He sent it to me yesterday, which is excellent. So as you can see, COD, when there is a gap up, he bought it. But for me, I don't advise to buy. I don't suggest to buy after the gap up. The stock was, but he has done, crazy trade. He bought it at 2.62. No, he bought it here. He bought it after the thing. It goes to 790 from 262. So it's like 5, 7. It's like 300%. Now he bought it here at 7. It goes to 60. Now when it was 60, he doesn't sell. It's crazy. I told him you bought it at 7. Now it is 60. Well, what is your problem? Why you don't sell in the morning when you see that big huge money? He left it until I think it goes here. I sold it here like 29 or something. He made 300%. But he could make he could make this from 7 something to 60. It's a lot of money. It's like 900%. You put 10,000, you get 90,000. You become rich. You buy a house with this 90,000 in one day. You see, guys? So I will show you the risk. I will show you some kind of risks. Okay, let's go to drug companies. Now look this. Okay, let's say you buy this stocks going up and then go down. You don't exit. It collapses. You don't exit. You stay until this company is bankrupt and it is sold. So the stock was $5.40 and it goes at 9 cents and it was sold. Either go bankrupt or whatever. Okay. So I will show you gap downs. Okay, here we have a gap up. The next day is a gap down. And this is sold. This company is sold or go bankrupt. Okay. I just show you some crazy things. You see here, a company begins with $3.23 or something. And the next day it go down. So from 279, it goes to 146. And, it's a lot of problems. You see, most of the penny stocks, they go bad because they are not good companies. You see, 63 cents. This stock was $21. You see how dangerous they are, and they are not showing any trend or anything. So this is just you see that. It was, for example, $2.25. It goes to $76. Yeah, if you are in this trade and you lose after the earnings and so you will make a bad choice. So let's go now. I finished the explanation. Now I will go to your thing. Okay. So we'll begin with welcoming our friends and our subscribers. So Saba, best teacher, thank you very much. Top series, hello Kareem. Fabian, hello. Rahmatullah Modi, hello Kareem. Free trader, hey everyone. Coffee time, yes. So Basan, he comes back. It's very good. He is trading cows. That's very good. Now it's time for the barbecue. Top series, some stocks don't allow stop loss orders. Hey, top series, I ask you, if you don't have the stock now, please, you will see my email in the description of the video. Send me an email, and tomorrow you want to buy, make me a screenshot why it doesn't accept, and send me what is your broker. You send me, you can do stop loss. Why? I don't know this. It's very hard, but you should give me, because I don't have this problem. I have never had this problem with a broker. A broker, he told me don't put stop loss. How can I exit? How can I exit from the market? I can't watch every second in the market in order to exit. Johnny Juvens, hi, how are you? Ahmed Din Shara, trading in gold stocks is the best nowadays. Now this is related to sectors. All the market has been doing good, not just gold and silver and the other mining thing which is going good. So everything is being good. Silver and gold also good. Okay, so you can find stocks everywhere. Johnny Jones, he say, I have Dow Jones puts for this week, and probably I will buy it again for next week. Pure gambling, no Abdul strategy. I put a little money, just $500. VIX green and DAI futures down right now. Okay, you are doing gambling. You congratulations, good luck. Okay. Top series said rule number 1, never lose money. Rule number 2, never forget, never lose. This is Warren Buffett. Yes, I know his rules, but listen. Warren Buffett's situation, it is not like other people's situation. If when he buys a stock, but Warren Buffett, all the media after 2 months, 3 months, they know that he bought it, because you can find his portfolio, because most of the time he buys 10%, 50% of a stock. All the media will know. So all the people think that he has a magic hands. So they all buy. Hedge funds, mutual funds, traders that follow more. No, he bought cheapest than anyone else. Any stock. But it has a good fundamentals. Okay, this company has good fundamentals. Yes, he's not crazy to buy a bankruptcy company. Yes, he's good. But because he is very famous and he has a history of good trades, so all the people will buy, so he will make money easily. It's not like you. If you buy a stock and you ask, no one knows about you, and no one will buy after you. So if the market is against you, it will be against you. Okay, so this is the rule. LJ Band T500, he said, how did you handle your portfolio in the middle February when the market started trading? How fast did you move to exit positions, or did you hold through the plunge? If I tell you what I did, I know, I am sure 100% that you don't believe. I don't know, but I felt that the market is not doing right. I sold all my on Friday, on Monday. I will show you right now where I sold. But I know you might don't believe, but you should see my portfolio to understand. Okay, I will show you Dow Jones now. Okay, please check where I sold. Okay. Now, do you believe me if I sold all my shares here in this day, which is 21st of February? I know you will not believe me, but you go to my account, and I sold on the 21st Friday, and I have a confirmation on Monday 24. I sold all my shares. So I am not here, I am not long. And then in this here, I sell short. I sell short for 1 week or two, and then when the market redresses, this is my strategies. When the market redresses, I go long. And you will see that I bought all my stocks here, in these sections here. But I sold on the 21st of February. How I did know? It means I see the stock, the market is not doing any more good, then it's green, then it's red. I thought it might have a gap down, but I sold some and I waited. I say if I am right, I am right selling, so I will sell the others on Monday. Yes, on Monday I sold the other shares, the other stocks, and I was empty. By Tuesday I have no stock. And I showed my guys, my friends, my subscribers, not on YouTube. No, I did it in my subscription. I know it comes to you, but I explained on this day why I sold. What is the reasons why I sold here, and I was right. And why I bought here, because I was right. That's it. If I am right, I stay. I sold and then I sell short. So guys, you should see this, and if you want to make sure I don't lie or I don't say just bullshit, as they say, don't say bullshit, don't say I don't know. Just go to my subscription, silver or golden subscription. My videos are dated by day. You go to 21st of February. This is something that I show to all my subscribers. I can't lie about this. I can't hide or say, oh no. After 2 months they say, oh no, yes, I sold. No, I can't, because I showed it to you on 21st. I sold, and my students on Monday, most of them, they sold their shares when they see there is a gap down. Okay, now let's continue. So Johnny Juven. You can what is it? Not Johnny Juven. Yes, LJ Brand 500. You can check. You can check what did they say? Just to make sure, and my just to give you an information, my subscriptions are here. You can click the link and you can check them later, or so you see what I offer. You can just try 1 month and check what I bought, what I sold. I have dates. I can't lie about this, because all my students, they see. If I am losing all my money, all my subscribers, they say, oh, you tell me that you are a good trader. You are not good trader. You lost all your money, so we are not following you. But it's the opposite. And this is from 2011. I have done all this. It means it's something that it is verified. It's not just a game of kids or penny stock. And I trade all kinds of stocks. I traded Tesla. I traded a lot of stocks, big and small, and even penny stocks. So you can find a lot of stocks. Okay, let's go and think. Vilad Slovirov, study what you do wrong and what you do often. Yes, you should study, but you should know the problems. You can study, but you don't know how to fix that, or you don't know really what's the problem. Because some people, they lose money, but they don't know what's the problem. So they should know first what are the problems, and then they see their trades. They will find the problems. And sometimes it's not only trades, it's the account management. Account management, if you don't manage your account well, it's like it's like when you have your paycheck. Okay, two people, each one they get $3,000 a month, like his salary or paycheck or in a month. You find that they have the same situation, but someone tries not to spend all his money. He pays his bills, his rent, and he still have money. He saved his money, he invests, whatever he does. So he is a good manager of his personal life, personal finance. You find someone who is getting the same thing, which is $3,000. He spent all his money and he go to credit card and he put more money on them. He make 1,000 more than he can bear, and that's why most of the people they get trapped into interest rate and they have bad credit, and this spoil all their life. It spoils all their life. So it's matter of management. You manage well with whatever money you have. You should stand up. You should not be in debt because you like TV and you spend $200 on TV. Or you want the highest smartphone, which is $1,200 with Apple. I want that. And you are poor. You are not someone who has money to have luxuries. So why you are putting all this on yourself? And then when you have bad credit and you become complain and the government doesn't help me, and why the government will help you? Why? If you spoil your future. So you see, this is like something related to personal finance. In trading is the same thing. You do stupid things, you do mistakes all the time, 2 years, 3 years, you will wipe out your account. This is for sure. This is for sure, because you are doing stupid things and you don't correct your mistakes. How can you make money? You lose money because of this discipline. Johnny Juven, he said, the reason is because I want to make huge money fast, and I have a few times hitting it big, but I have losses too, and I don't have patience to grow my money slowly. It's hard. Yes, Johnny Juven, you have explained your situation as anyone else, as me also. When I was a beginner, I did the same thing. I want money. I don't want to stay 10 years trading and then 10,000 I make it 30,000, 40,000. No, I want the first month I double my money. As some people they send me emails like this. I have made 100% in one trade. I am okay with that, but can your strategy makes me 500% or 1,000% in a month? I will go and teach me. I say, man, I am not having a bank and I show you how to take money from it. I am a trader. I am not making 1,000 per year, 1,000%. I make 50%, 40, 70, 80, 100. It depends on the years. But I'm not making 1,000%. Where have you seen this? Who tells you that these guys exist? So because the people, they want money. It's like gambling. You gamble each day. We put $2, $5, $10. I have a friend before who is a gambler. He spent hundreds or thousands a month, all what he gets from his job. He is crazy in gambling. I told him, all this money, if you put it in stock market, in stocks, just without trading, just investing, you could make this 50,000, 100,000. This now, after a few years, you have made like 1 million or 2 million, and it's enough for you to do traveling, to do trips, to eat, to have a nice house, a nice car, a nice girl. Because we have money, nice girls is attracted to money, not to you. Even if you are not nice, if you are ugly, but the money attracts nice people, nice girls. So all the life will be good for you. But you spend all your money and you gamble. That's why you are poor. So you are not doing business. Gambling is not a business. It's sometimes you make it, sometimes you don't make it. There is one funny thing about about these guys who does what is it called, gambling. He was, I think he was in TV, and he was in some news. This is many years ago. I don't know. Someone gives him $2 or $5 or something. He just bought a lottery ticket, and he won. He won 50 million, or I don't know how many millions he won. It's big money. Now, he bought a house, he bought cars, and he invited all his family. They drank, they put a lot of alcohol, they drank, and there is a fight, and all they end up in prison. You see, he has never been in prison, although he was like outside, homeless. He has been a good person, although he is homeless. He has no job. But whenever he has money, he become spoiled with money. And then the next day he was in the prison because he fight with his cousins about something, Maybe he tell them, okay, I am rich now, and you are poor, and you don't help me. When someone is drunk, he said something that it is bad to people, and people reacted, and it's his family, but they fight, and they put him in jail with his family. You see that? It means when you do stupid things, you expect stupid things, okay? But Johnny, Juven, you are like me, like everybody else. We want money quick, and sometimes I get tempted to put a lot of money in a stock. I see a stock, I see this. Can I expect big money from it? But later I say no. What if I have a gap down? Okay, I will lose all my money. No. All the profit I made in 1 year, one stock I play the stupid, and I gamble. I lose all my profit of the year. I don't want to lose my profit. I use my profit to live, to do things. I don't want to just to give my profits to other traders after 1 year working. It's not stupid. So it's good to be disciplined and to follow your rules and not to do stupid things and gambling. Or if you want to gamble, put some money, little money that you don't care that much. If you 100, 200, you buy puts or buy calls or penny stock that it is flying. Even if you lose $100, $200 or $500, it's not a big deal. Like when you lose 50,000 or 100,000, you put it in a stock and then you lose it. Man, this is a big deal. You will cry all your life when you put 100,000 in stock and the next morning they say it's 80% gap down. What do you do? Well, what do you do? There is no one who cares about you. Not the stock market. The other traders, they do selling short. They get the 80% that you have. They get it. So they're good. So one is crying and one is happy. This is a stock market. It's always like this. NASA. One short seller blew his whole account shorting code. $14. 10 months of profit gone. Now his account is minus 15,000. Yes, listen. NASA, you give a good example. Penny stocks are hard. For me, when I do penny stocks, when I see the money, I see a lot of money, I sell. Sometimes I sell all my shares. Sometimes I sell half. Sometimes I leave just little. Next day, if it's good, it's bad, I will sell everything. But I keep the profits that I get. I'm not stupid. Some people, they double their money, like this guy. 500%. This guy, he bought it at 7. He was lucky. The next day, 60. In the morning, he didn't sell. What do you want more? You want $1 to make $1 million? You have made enough money. Okay? If you have made 800%, what do you want more? Stop. Guys who make a lot of money, sometimes the market give you a gift. Give you a gift because you are right. So you take your gift and you say buy for this stock. Or you sell half of your shares, or you sell all, you leave few. because you have made a lot of money. You should get that money from the market, put it in your account. When it is in your account, you are okay. And even if you make 50,000, 60,000 in trade, take half of this money, put it in your checking account. Do something with it, or pay your mortgage, or buy a nice car. At least you will be happy with what you did. Not from 60,000 it goes to 30,000 to 20,000, and then after you have made a lot of money, you lose it. You lose your profits because you are so greedy. So please don't be greedy. When you see a lot of money, sell. But I'm not saying when you see stupid people, 2%, 5%, 10%, you sell. This is not trading. This is not trading. I would not sell for 5% to 2% or 8% to 2. I don't, because it's not that big. It's not, because the market can go up and up and up and make 50% or 80% later. So don't rush to take your money when it is little. Okay? Now, let's Johnny Joven, he said, I have an intelligent question for you. I hear that professional traders sell options, either puts or calls, to increase their profits. Do you sell options on the shares? On the shares? Oh, no. I don't do opposite positions. I don't go against my money. Because when you sell options, put options, and you are going long, so what does it mean? It means you are against yourself. And who tells you because these options, even if you make money from the options, you lose money from your position. And calculating this thing is done. You know who does this? They are mostly mutual funds or hedge funds, because they don't care. It's not their money. If they see the market is going down, for example, mutual funds, they can't sell short, so they buy put options just to make it nearly, just they don't lose too much money. But he is losing money from his account, and he is making little money from options. He can't buy too much. Okay? But when the market changes, the stocks are going up, and the options, he will lose those options. The profits, he will lose them if the market is going up. So it's a lot of calculations, and mostly mutual funds, they do that. Now, why they do that is just to make your account average, not to lose too much money, and not to make more money. They don't. Okay? But most of the people who go long, they don't want to do that. For me, I don't. I don't go against my position. I am long, so I am long. If the stock is going down, I sell it, and I can buy puts. But it is going long, I buy puts and make money. That's it. Why should I keep the stock here? I don't love stocks. That's why there is something. You say, date stocks and never marry them. This is what we do. We follow trends. I am not holding the stock to hold it, because mutual funds, they do investing. They buy good companies. They buy good companies in sectors. Some people, they help them. They help them with things. So they buy for many years. But for me, I am following a trend. A trend can be a few days, few weeks, or few months. So you understand that I am not staying 5 years in the stock. I don't. I have never done that. I can stay 6 months, 7 months, 8 months, 4 months. But I don't go to years. Because years, it means you invest. I don't invest. I have some investments, but this is locked. I know some, I have good companies. They are going up for years. So I have my investment there. I don't touch. I see them each year. I see what's going up. I am making money from them. That's it. I don't care. And they go little by little. But my trading account should be faster. I want more money faster because it is trading. That's why this is the difference between trading and investing. Investing, if you are young and you are looking for the whole life, you should make an investment. Because the companies, they grow. Stocks were $10, now they are $200. They were $1,000, $2,000. Check Apple, check Facebook, check Amazon, check Tesla. They are making a lot of money. And if you have investment for many years, you should have made a lot of money from this investment. Andy, hello Andy, I didn't see you for a long time. Did you told your subscriber what you did in February? No, listen, Andy. You said, did you told your subscribers what you did in February? They know, they see it. I sell short. And our account go down because all the stocks have been going down. So I go and sell short. And they see, because Andy, I know right now, I know that you are not a subscriber. So, if you, for example, if you subscribe now and you go to February, you will see how much is our each week. And each day I buy or sell, there is a video with the date. So all my subscribers every day, they know what I am doing. If there is nothing, so I will explain this because it seems a bit not explained. I will explain it, guys, just to understand what I am doing. For example, okay? So what I did in each week on Friday, this is where I do the videos. So I will show my trading account. This is in general, okay, trading account. I speak about what I did, but let's say we are on Monday. If I buy or I sell, I make a video at night. Let's say this is 20 July. Let's say it's Friday, 20 July. 21, 22. Yes, this is 23rd. Let's say if I buy or sell, I should make a video at night and explain my students. So my students on Monday, they know what has been changed from Friday. Now let's say from Monday to Friday, there is nothing changed. I keep all my stocks. I don't do videos. On Friday, I do a video explaining the whole week from last week. Okay? And each week, each Friday, I make, for example, Golden, I make a trading account. I show my stocks. I show what they did in the week. I show the investing account. I give a lesson or two depending on the thing. When some people they ask me, everything is documented. It means these trades are verified because I send you the video on the same day. If I buy Facebook on February, for example, and I sell it after a few days, you will find at that day I buy it. I say to you, I bought Facebook and why I bought it. Let's say on Friday I sold it. I make a video and I sell Facebook because of this and this and this reason. So you should understand. So my subscribers, they know. For example, I will give you another example that most of you don't go. For example, this I showed to one guy on the 21st of February, the beginning of the downtrend. So I sold on Friday. This is Friday. I sold a lot of stocks. So the market go down on Monday. On Monday, it go more down. There's a gap down. I sold what is left. So here, I am zero stocks. I don't have stocks. I sold everything. Now, why I sold? It means my students have seen me sold all the stocks. I told them on Friday I sold some, but on Monday, if the market goes down, I sell everything. So I sold everything. So this is documented. So 21st, 22nd, 23rd, 24th. 24th I sold. You go to 24th February, you find that. You find I sold all the stocks that are left. Now, another thing that happened. When the coronavirus, I will just give you the thing. It was going up, stock market stops, it goes down 1 month. Now, when let's see, put it in red. Now, let's see when the stock market has been going down, it stops. So this is a support line. Now, I sold my shares here, sold. Stock market, the first or second week is going up here. I bought again. Now this is documented. It means it is documented. All my students know. And I challenge anyone who goes to my subscription and he told me, no, you tell me that you sold here, but you sold here. No, I sold here. You find the dates. I bought here at the beginning of the trend. This is training level 13. So you find that I begin here. Now I can buy here, I buy here, I buy here, I buy through the trend. That's why we make 90% now. I can't make 90%. I didn't make 90% with one stock, like gambling. I bought a stock, it goes 90% next day, and I say, oh, I have made this. No, I have bought a lot of stocks. I bought, I sold, I bought, I sold, and this is the result. Now people see the result and see the documentation, that are verified. It's not I hide anything in my account. Now my account was 100 when we begin. It goes to 81. 81, it means we lost 19%. Because I put some selling short, I put this. I make some money, but I lose some money. But I told them, when the beginning here, I told them that we are going to make our money again to break even. You will find it in one of the videos that I make. We have got our money back, and then from 0%, it means a plus, it means we don't lose any money, we are making 90%. All this is documented. I don't hide. I don't say, no, I didn't lose 19%. No, I lost 19%. But I know, because of my strategies, because I trade every year, I know there is other opportunities to make my money back. But I don't buy a stock, it's going down, and I let it going down. This is stupid. I don't do that. I don't do this stupid thing. I am not an investor. That's why when I lost 19, it's just because I traded here and there and put stop loss. When I put stop loss, it gets triggered. I exit. So I lost this money. But I told them that we are going to make our money back. This is not just a guarantee, but it is a way of trading because I trade every year. So I have experience. I know the market will redress one day. Or we sell short and we continue to sell. Because when I sell short here, when it stops here, it bounces back. So I begin to lose my profits. So I sold all my sell short here. I sold them, and then I bought long. This is what I do. This is something that it is documented. It means I can't lie about this. And all my students, they see that. It's okay. Now, Johnny Juven say, yes, he did, and he mentioned in a few times in the live, I'm at that Friday on my call options from 2K to 13K, and I regret the next week. I didn't buy the puts, but I didn't know, but I was there and so. Yes, it means there is opportunities when you can make money when the market is showing you the direction. Because we follow the market direction, the stock's direction. I am following trends. I am not a day trader. I buy today and I sell tomorrow like stupid thing. I don't do that. I don't do day trading. I follow trends. I want the big money, but the big money that it is controlled. There is a trend. I see the trend. I buy and I leave it. Most of the time I don't sell very quick until I see that the trend is stopped. If the trend stops, sometimes I sell. Okay? Dan Como, thank you very much, Dan Como, for coming. He say, so alarms are the key. No. Alerts is just if you don't want to put stop loss, and your broker send you an alert to your email or to your text message in your cell phone, just to know what is the price. For example, you put 2 alerts. If you in the morning you want to sell at certain time, certain price, okay? So how do you know? You are at work, for example, and for me, I don't watch the whole day. No, in the morning I just see in the morning what the stocks are doing. Just in the morning, just in 1 minute, I open my account and see. Oh, they are doing good. Okay, don't worry. But at the end of the day, I will check again, because sometimes things happen. So I will check again. It's good. That's it. I spend 2 minutes in my account each day, except when I want to buy or sell. It takes me 15 minutes or 20 minutes. That's it. I just go and search for stocks. I see them. I choose 1 or 2. I buy. That's it. I'm not going to stay the whole day watching my stocks go up, each second, like some people do. It's crazy. I was doing day trading. It was too much stress, too much work. You should look at your half an hour, 1 hour, 2 hours, 3 hours. You should look where the stock is going. You should be very, very active when you are day trader. LJ Brand 500. I will check it out later. Thanks. Dan Como said question mark. I just explained to you, Dan, the thing. Dan Como, he said, what a trading software is that it is nice. I don't use the trading. What do you mean by trading software? What do you mean by it? Do you mean you buy trading software and you throw the money and it is... No, this is not a good idea. You will lose all your money or you have trouble. Don't use machines in trading. Trading is a human. Machines are not a human. They do certain rules, but if people are selling short after going long, your machine will not. So I don't understand what you mean by trading software. Are you speaking about broker platform? So please explain before we finish, because I have only 3 minutes and we finish this. Nasa said, yes, Kodak X, we have seen it. Camera company Kodak stock got 788 million from USA government to manufacture corona drug. Stock went from 2 to 21. But what does it? Why this is camera manufacturing? So what has a relation with drugs? It changed the business? I don't know what you are saying, but it's okay. Johnny Jovi say, my conspiracy theory is every few weeks there is always a stock that has a huge gains and it attracts new experienced traders. But I tried to short Kodak at 60, but put options were too expensive. Yes, you can do strategy about stocks that go think, but sometimes you are wrong, because I see this stock from $2 it goes to $7. It's like 300%. If you go to short it, if you put 1,000, 2,000, 5,000, this $7 it goes to $60. So you are wiped out. Let's say you want to do shorting, because it's very hard. Now, if you sell at 60, you can do puts out of the money, and you can find it cheaper. You can do that. Yes, but you should risk, because you have a strategy and you want to take advantage of this high stocks. So, and listen, there is no conspiracy, there is nothing. This is trading. People, when they see the things flying, they go and buy. Especially day traders. If they see something going short, they sell short. Especially day traders, they make a lot of money like this if they follow this thing. Johnny said, unfortunately, I don't have a large trading account, but you can buy out of the money. If the stock is 60, it can go to 50 or to 40. You can find the bargain, and you find puts with small money. It's not a big deal. You can find, but you don't buy too much. Buy only one contract if it's expensive, and go down more, and you can make money also without. But understand that puts you are going to do a 100% risk. They are not like stocks. It means the money that you put, you might never see it. From the 60, it can go to 100 or 200. You don't know what the people are doing, but you think that it goes down, but it might go up. So you will never know. So it's very risky. So I don't do risky trades like you want to do. I don't do crazy trades. If I had a large account, I wouldn't need to trade options anymore. Okay. Kodak is a pure pump and dump manipulation by insiders. In 2018, they were involved with the Bitcoin, and the stock went up then. Okay. Yes, they changed their they changed their business. How they changed their business? It means someone who's doing camera, and then they changed to do drugs, and I don't know. It's okay. But it's very hard. It's very hard that a company is doing camera, some technology thing, and then they do viruses and drugs, which is another thing. Okay, so guys, thank you very much for watching. We have 2 hours. I can't speak more than this. As you know, 2 hours is more. Sometimes I go beyond. And guys, discipline is very important. You want to be a good trader, focus on discipline. Have a training strategy. Either you make your trading strategy, or you go to me, or you go to someone else. It doesn't matter. Just be disciplined. If 1 year, 2 years, 3 years, you are break even, it means you are still doing mistakes. So you should find a better strategy, or you should see if you are doing mistakes. Okay? So guys, thank you very much, and I hope that this year will continue to be a good, very big, good uptrend, and we will make a very good year. Although in our life, coronavirus has made a lot of death, a lot of cases, and all the people lost their jobs. But in stock market, the people are making money. So you see the difference. You see the economy is and the personal life is not like the market. Market is always different. Okay. So guys, thank you very much for watching. Please, if you have a question or stock, just send me some information and ask your questions. I can help you for free. It means I'm not going to teach you. You send me an email, I will teach you. No, but I will just give you a suggestion and my view. My view is very important. At least you will see yourself if you have done right or no. Even if you lose money, sometimes you are right to exit. You say, "Oh, Karim, I bought this. I exit here. Am I right?" I say yes or no. Okay. Thank you very much, guys, and see you next week.